in periods that are clearly defined and won't mess up your 941, your payroll report that's produced to the IRS. It is just changing places, but every time you make a correction and you go back and you make such a monumental effort as what you're describing, you're likely to make a mistake. And so you have to keep that aspect when you're weighing the pros and cons of, well, I do want everything to be perfect, and I do want to go back and make everything corrected like you're talking about. You're likely to make some kind of error, and when you do, it's going to flow through and cause a problem with your already reported 941s if you make an error plus or minus.
But also too, if you're, I would think going back probably doesn't make a lot of sense anyway, at least at this juncture, because your gross profit is kind of like your current status of your business or whatever.
Mm-hmm.
If you're going back and changing something like that, am I on the right path by saying that? If that's already done. You've already baked that cake and you're moving on to the next.
Yes, those decisions that you made before can't be made over again. You already made your decisions.
So you wouldn't necessarily need, on something, at least with this,
Mm-hmm.
you wouldn't need to go back. It might be something else, but something like that, it doesn't make a lot of sense, because really you're looking at your net at the end of the day, after that.
For the purpose of understanding operations, making the correction that far back is what James is saying. My operational decisions cannot be affected in the past, but it can really affect my ability to make more profitable and great decisions going forward. Do we really want to make the correction in the way you're talking about, redoing payroll like that? The way that would bring both sides to a happy medium is you figure out your percentage of what it would have looked like had you done it correct the first time. In this example, this slide, I determined that I was about 100K off on the bottom side. I said it backwards, but you see I ended up with 100K once I made my journal entry, and this was one entry that I made. I didn't go back and redo payroll. I did one entry to correct what I thought it should be and properly reflected in one entry. In the prior period, like this would have been June 30 correction, and then going forward I would have corrected my payroll items, and I would have made it to where I can pay Vicki as cost of labor, cost of goods sold, and I can pay Scott as office admin below the line, however it looks to you.
You also, if you change it to, you have your federals that you pay, but you also have to deal with like Texas Workforce Commission for your unemployment, taxes, and all of that kind of stuff. That all starts to sort of snowball if you were to change that. You have to go into, we have to go in and readjust,
Mm-hmm.
you know.
Well, you actually can keep your payroll tax groupings the same for above the line and below the line. You don't have to have a payroll tax, employer tax for the top and the bottom, separate all that out. You can keep all the employer taxes and all the employer payables in the same default settings that QuickBooks suggests for you, because the tax side of that does not affect your operational decisions one way or the other. It is what it is. So, great comments, everybody. And now I'm going to show you a period over period way to look at the same information. I took the total that we were looking at first. I took the grand total for the year and I divided it by 12. And now the result is January, okay? So the January in this column is just the annual divided by 12. February, I'm looking at my margins, and I had an opportunity to increase sales and nothing else changed. My sales went up, my costs were the same. how did that alone affect my margin? The red circles are the clues.
44%.
Uh-huh. So I'm going to take now a nuts and bolts type of visual to apply the information that we're learning. If in cost of goods sold, month over month, everything stays the same except my sales go up, my margin goes up. Everybody agree? Okay. And month over month, I have my January column, and now I compared it to March. My March, I changed my payroll. No, I didn't. What did I change? I changed my equipment rental. Anyways, I didn't bring over my categories. I apologize. Anyways, my costs went down, my sales stayed the same. If my cost goes down, my sales are the same. What also does that do to my margin? It increases it also. So in April, if you can follow to the far side of the screen, I increased sales and I decreased cost in that month. What's the net effect of increasing sales and decreasing costs?
Double.
Yeah, even better, right? So how does this help you as a business owner? If you're following your patterns and you know what's typically the norm for you, and you have the opportunity to buy something in bulk, for example, for a lot less than you normally get it, can you make that decision on the fly and know that that's a good purchase? Yeah, and the result of that purchase, you know, is going to make your margin go up. And if I have a new customer, and my new customer is maybe paying for the same services, but maybe we got a better rate, my sales are going up, and I had that opportunity to buy something cheaper. These things are starting to work together in your mind now. Oh, this is how I'm affecting my margin here. And now you know when you have a cost that increases, everything else is the same, margin goes down.
Oh, I thought you said.
Costs increase,
Oh, yeah.
Yes.
costs increase,
Yes.
sales stay the same, margin goes down. So the month over month of this, when you put a side by side of what we are just talking about, the result is that in every single month, I was able to make better decisions. And when I was able to make the combination of better decisions, how much more did my margin go up from January? So the question is, April's margin is so much better than January's because I was able to understand the patterns of my operations such that on the go I'm now making quick decisions in the field. I understand how to make those more profitable decisions on the go, and I understand